Welcome everyone. Glad you could join us for our 1-hour webinar on 3 ways AP can help businesses weather an economic storm. My name is Jeff Ouellette. I'm part of the marketing team here at MHC, and I'll be facilitating today's discussion. Our speaker today is Mark Rousseau, who I will introduce shortly. Next slide. First, I'd like to go over some housekeeping rules with you. The webinar is being recorded, and attendees will receive a follow-up email with a link to the recording to our website. All participants are muted to prevent background noise, so please type in any questions you may have in the Q&A section, and we'll get to it at the end of the presentation. There will be a post-webinar survey that will appear when the webinar ends. Please use the survey to let us know how we're doing and to request any additional information about MHC. We really appreciate your feedback. One more item before I hand off to the presentation to our speaker today. For those of you not familiar with MHC, we help organizations tackle digital transformation with speed and confidence, using our solutions to automate, capture, transform, and communicate a variety of paper and digital communications across core business processes. Our flexible end-to-end AP automation platform helps users eliminate tedious procedures for P2P, order to cash, tasks, increase efficiency, achieve operational excellence goals, and strengthen relationships with customers and vendors. Next slide, please. So let's hear from Mark. Next slide. A little bit about Mark. He's got 27 years of experience in AP, AR, and payment automation systems. He's a regular speaker on our Thought Leadership webinar series, so we're glad to have him back. He's an advisor to leading AP providers and AR automation solutions. He's a frequent author and speaker on AP and P2P trends and best practices. And he's a Philadelphia Eagles fan, so I'm sure he's awaiting this weekend to see if his team's going to go to the Super Bowl. So at this point, I'll just hand over things to Mark, and away we go.
Hey, thanks so much, Jeff. And I really enjoy the MHC webinar series, but some really great speakers. But do any of the other speakers color coordinate their top to the MHC logo? I don't think so. Hey, everyone, thanks so much for joining us. Thanks for the warm introduction, Jeff. These are interesting times when it comes to finance departments these days. We are in a tumultuous time. We have this combination of rising interest rates, sky-high inflation, clogged global supply chains, and a challenging labor market just to top it all off. And all of this together has made it look likely that a recession, or at least an economic slowdown, is in our future. Now, we can argue about whether it'll be a hard landing, a soft landing, or maybe status quo. But what's not arguable is the fact that AP leaders need to be prepared for the unexpected. If there's one lesson we've learned over the past 3 years, it's that we need to be adaptable in accounts payable. And when we think about what potentially could happen with the economy in 2023, well, the fact is that AP can be a ballast to the organization. It can help provide the stability to help business navigate the toughest of economic waters. And that's what we're going to talk about today. We're going to take a quick snapshot of the macroeconomic situation, tell you what I'm hearing when I talk to AP leaders and CFOs about what they think might happen. We'll show you how manual processes are holding AP departments back, and how they put you at a competitive disadvantage when things get tough. We'll also talk about how financial automation solutions like MHC can help your business in tough economic times. We'll provide you with an action plan for automating accounts payable, whether it's for the first time or to refresh your existing technology. And of course, as Jeff said, we'll make time for your questions. So I encourage you to send them in throughout today's webinar. But before we do any of that, we're going to start with a poll question, which is about to be displayed on your screen. We want to know, has your finance department taken steps to prepare for an economic downturn? Has your finance department taken steps to prepare for an economic downturn? Yes, no, but you're planning to, or you're not sure. Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. You know, it's interesting. Just when we thought we were coming out of the woods from the turmoil created by the pandemic, we ended up with the possibility of a recession on the horizon. And that's really caught many organizations by surprise, right? We were planning for growth. The last thing we thought was we're going to hit another bump in the road, but that's exactly what's happening in today's environment. We asked you, has your finance department taken steps to prepare for an economic downturn? Well, to no surprise, 60% of our attendees today say yes, their finance department has already taken steps. Another 20% of you say you haven't taken those steps yet, but you sure are planning to. And 20% of you aren't taking any steps, or you're just not sure what your finance department's doing. Here's the key thing. It's imperative as AP leaders to have your department prepared for anything, whether the economy goes sideways or whether we keep chugging along. You want to make sure that AP provides a foundation for efficient, scalable growth of your business. For too long, accounts payable has been this quintessential back office function. We were a tactical drain on resources. Well, the fact is that AP can help be a driver of growth to the business if you take the right steps. Well, before we get into that, let's take a look at where we stand from a macroeconomic picture. When I talk to CFOs and to AP leaders these days, the consensus is that some sort of an economic slowdown seems inevitable. And a quick glance at your daily newspaper, I suppose some of you still subscribe to a daily newspaper, maybe online. A quick glance at the news will prove out this fact. The fact is businesses are already laying off staff and shuttering operations in the anticipation of a possible slowdown. The fact is it's been a long time since we've been in a rising interest rate environment, and that, combined with the unpredictable costs created by the global supply chain crisis, as well as sky-high inflation and a tough labor market, well, it's made it very hard for businesses these days to foresee tremendous growth in 2023. The good news is most economists believe that we're going to come out of whatever situation we're in pretty quick. And that means that we need to be ready for that as well. And that means creating that foundation for growth. Today, many businesses are already bracing for a downturn. As I said, many organizations have been announcing layoffs. Just this week, we saw Spotify, among others, announce significant staff reductions. And the thing is that despite those staff reductions, this is an unusual period before an economic slowdown, in that we haven't seen more of that. And that has to do with this third trend that we're seeing today, and that is a labor market that's complicating things. Ordinarily, in the ramp up to an economic slowdown, businesses would aggressively be reducing their staff. We haven't really seen that. While media and tech, we've been significant layoffs, it hasn't been as fast as you would think. And what we're hearing from a lot of finance leaders is that their businesses are hoarding employees, if you will. What they're thinking is that it's such a challenging labor market now that they want to be absolutely sure that things are going to go sideways before they let any staff go, because they realize that if they're wrong and we don't have a recession, well, it might be hard to get that staff back, particularly if you're letting go of some of that institutional knowledge in the form of seasoned workers. The labor market is a big undercurrent of all of this discussion today. When I talk to AP leaders, they're telling me it's taking longer to fill positions. We haven't seen a lot of AP departments increasing their salaries. They certainly can't throw big signing bonuses at staff. And that's because AP just doesn't get that kind of attention from the C-suite. What I'm hearing from AP leaders is it's tough for them to hire staff, and it's tough for them to retain staff. Today, 30% of all AP professionals are either either actively looking for a job or planning to do so within the next 6 months. What's interesting is AP departments are now competing for staff with service industry jobs. So I was talking to one major AP department in Toronto recently, and every summer they count on receiving an influx of young workers who've just graduated from college and use AP as a bridge job until they find employment in the career in which they majored in. What's happened is that now that service industry positions are paying so much more in Toronto, well, those young workers aren't coming. And so now labor is really hard for this particular AP department. The same type of thing is playing out in AP departments all across the globe. And this is causing big issues for AP leaders. We've got to find ways to manage our staff, even in the possibility of an economic slowdown. Make no mistake about it, from a financial perspective, businesses are facing some challenges these days. Many have called it a cash crunch. Maybe you're feeling this. According to the recent working capital study by PricewaterhouseCoopers, days sales outstanding, that average amount of time it takes to collect money from a customer, recently reached a 5-year high. On the other side of the coin, well, days payable outstanding, the average amount of time it takes a business to pay its suppliers, well, that's increased by 7%. Put it together, slower payments are going to really create a cash crunch for many businesses. But that's not all. Net working capital days also reached a 5-year high recently, and return on invested capital recently reached a 5-year low. All the while, net debt reached a 5-year high. Put this all together, and what you find is that many businesses are struggling to ensure their cash flow. What does this mean for AP leaders? Well, you're going to be having more conversations with senior management, regardless of the economy, folks, about what's going on with cash flow and corporate spending. So you're probably getting more inquiries these days about, hey, give us visibility into accruals. Tell us where you think things are going from a cash forecasting perspective. What are our cash projections for the next several months? Where are we at with our corporate spending? And all of this, the backdrop to all of this is that businesses are saying, hey, we better get this under control so that we can ensure that we don't flirt with cash insolvency. You know, it used to be that was a term that was saved for business school, right? It was one of these things that appeared in textbooks, but rarely became a real world challenge. Well, that all changed during the pandemic, in those early days when many businesses were scurrying to adjust their expenditures to meet the reductions in inflow. Well, I think we learned that lesson well during the pandemic, and businesses are going to be sure to make sure they manage their cash carefully. So how are AP departments preparing for a recession? Well, the Institute of Finance and Management recently surveyed its members, and based on the responses from hundreds of AP leaders just like you, what you could find is that many AP leaders are pretty concerned about what's happening. 15% of AP leaders said they're highly concerned, and they're already taking steps to prepare for a recession. 1/3 of AP leaders said they're concerned. They're considering a strategy. Another third of AP leaders said they're somewhat concerned, but they're taking a wait and see approach. Put it all together, and 8 out of 10 AP leaders these days have some level of concern about what's coming down the pike. We can feel it in our knees, right? If you've got that arthritic knees like I do, you just know when the storm is coming. Well, we know that something's coming, and we've got to take steps to prepare. It's not just AP leaders who are preparing for the worst. It's also CFOs too. CFOs are starting to shift their priorities. They become less focused on driving corporate growth and more on ensuring financial stability. And there's 3 things that I'm hearing CFOs are doing in particular. The first is they're focusing more these days on improving operational performance across the business. So they want to find ways to root out those inefficiencies in the organization so that they can do more with less. This is why we haven't seen a slowdown in the adoption of technology? Now, this is a big question I've been getting. Well, Mark, is this a time that we should be spending money on automation? Should we be hoarding cash? Well, I don't think so, and neither do CFOs. What they understand intuitively is that if we can become more efficient in our back office, whether it's AP or other functions, well, now we're going to be able to scale more efficiently, to be able to weather the storm, to be able to have a platform for growth. So that's why we haven't seen a slowdown in automation spending, and that's why I don't think we're going to see it. The trend that started during the pandemic, I think, has got legs. The second thing that CFOs are focused on these days is strengthening cost controls. For the past 3 years, businesses have turned themselves in knots trying to rein in their expenses. And in many cases, that's because they simply didn't know how much money they were spending or who they were spending it with. How bad is the problem with corporate spending? Let me tell you. Today, most organizations say that they only have tight control over 74% of all of their corporate spending. That's according to data from the Institute of Finance and Management. Now, think about that for a moment. If I told you that only 26% of all of the money that your company spent would be wasted or not able to be tracked, and I tried to convince you that was a good thing, you'd think I was nuts. And yet this is the reality today for most businesses. Today, they can only manage 3/4 of all their spending. Well, this comes back to AP in a big way. The fact is that through the data that we sit on in our AP department, we're able to tell the business who we're spending money with, who's spending it, how much they're spending, what they're buying. The thing is that in many AP departments, this data is trapped. It's trapped in file cabinets. It's trapped in cardboard boxes. It's trapped in Gladys's desk drawer because we haven't digitized this data. We can't get at it. So what CFOs have realized, if only if they could get at this information, well, now they can have better control over the expenses. And this is where you start to see the collaboration between AP and procurement become paramount. So while procurement can provide us with half the spending picture, AP can fill in the proverbial gap. The third thing that CFOs are focused on these days is improving business agility. They want to find ways to ensure that the business could adjust quickly to changing economic conditions, to new disruptive competitors, to entering new markets. But the fact is that without good information into what's happening from a cash flow perspective or from a spending perspective, well, it's hard to do that. So we're seeing CFOs start to look for ways to go beyond the ERP, if you will, to find real-time data from the point that information gets to the doorstep. And this is going to be a sea change in the way that AP departments work, because now AP can become an information hub to CFOs. The thing is again, we've got to digitize that information, but we've also got to serve it up to CFOs, to controllers, to stakeholders in a way that's useful to them. We've got to personalize the information. We've got to present it in a usable format. We've got to make sure it's timely. We've got to make sure it's integrated with other data sources and other downstream systems. And this is going to be incumbent on AP moving forward. 78% of finance and AP leaders would like to support business growth without adding AP staff. In times like these, this goes back to the idea of doing more with less. We want to be able to get our jobs done without having to throw people at it. And you know, it's interesting. In AP in particular, this is a big challenge. Today, AP professionals are working longer than ever. In fact, 34% of all AP practitioners are working longer hours compared to before the pandemic. 15% of AP practitioners, well, they're working an additional 2 hours per day. Now think about that for a moment. That means that it's a 1/4 increase in the time spent on the job for our full-time staff. That's a lot of time. How in the world are we going to be able to manage more in tough times if we're already burning the midnight oil? What's more, once we get past the recession, how are we going to grow the company without adding staff, which is hard to find, if we don't have the tools in place. So what we need to do is we need to find ways to navigate financial uncertainty. And in my mind, there's 4 things that we need to do in order to do that. We need to become more sustainable. We want processes that operate in what I'd call a continuous process improvement loop. Here's a stat that's probably going to surprise a lot of you on the phone today. 77% of all AP departments have deployed some kind of AP automation technology. 77%. It's rare to find a department that's completely manual and paper-based. And yet, despite that statistic, 64% of AP departments manually handle most of the invoices that they receive. Hold on a second, you're wondering. How can we be automated and manual at the same time? Well, don't blame the technology. Blame the approach that most organizations have taken to deploying the technology. You see, when it comes to automating AP, most of us have a pretty immature approach to things. Think about how it is we go about the evolution of automation. We all start with manual paper processes, desk level decision making, if you will. This is where we rely on Linda to make decisions on how each invoice should be processed, how it should be routed, how the geocoding should be done, how it should be input into the ERP or accounting software, right? We're really dependent on Linda at her desk to get this stuff done. Then we deploy some technology. Maybe it's a document management solution, and that provides some normalization of rules, but around the fringes, we still have lots of Linda. She's still making lots of decisions and has to intervene at various points of the process. This is where most organizations reside. They've done something, but they haven't done everything. What we aspire to is what I would call departmental level automation. This is where we've deployed an end-to-end solution like MHC. And now we have the ability to enforce business rules, to enforce separation of duties, to enforce chain of custody, to ensure that everything is done the way it ought to be. Linda isn't making these decisions anymore. The technology is based on business rules that you've set up. So how many organizations are operating in that kind of environment? Well, less than 1 in 5, according to data from the Institute of Finance and Management. And that's what we want to aspire to. We want to be in a continuous process improvement loop where things are on autopilot, where they're sustainable. When we do that, we also become more adaptable in our organization. Now we can quickly adjust workflows to account for that new business line that we added. Now we're able to support international payments with multiple currencies and multiple languages and submissions that have to comply with multiple government regulations. Now we're able to have multiple subsidiaries supported all under the same structure. Now we're able to onboard suppliers regardless of where they reside. We're able to provide visibility to individuals and authorized users 24/7, no matter where they are. And that brings us to our visibility. Today, most AP departments are flying blind. In fact, when you talk to controllers, this is the biggest challenge that controllers have with their way their AP department currently operates. They don't believe they get the visibility into payables data that they need. Well, this has a lot to do with the way that we manage our information in AP. In many cases, my friends, data isn't captured. It's captured incorrectly. It's incomplete, it's poorly organized, it's fragmented. Put it all together and decision makers just don't have access to all of the variables they need to make decisions on a day-to-day basis. We need to find ways to get better visibility, especially in tough economic times. And that brings us to the 4th thing that organizations will need to navigate financial uncertainty, and that is control. We can't afford to have fraud or compliance risks in times like these. And yet 25% of AP leaders say that concerns about rising risk of fraud and compliance is the biggest challenge their department has now that they're working in a remote environment. Look, when we went to the remote work environment, It completely disrupted long-established policies and procedures that we had in place for how it was that things should get done. The IRS, the FBI, Interpol, states attorneys general, a who's who of people you never want knocking at your door are sounding the alarm. They're saying that the way we're doing things in AP these days is creating lots of risk. And we need to find ways to ensure that we can keep things under control no matter where we work. One of the biggest challenges AP departments face these days when it comes to control is the rise in business email compromise attacks. I know a lot of you are relying heavily on email to onboard suppliers and route invoices for approvals. The problem with that workaround is that it simply isn't secure. It's too easy for bad actors to infiltrate our workflow or email streams. They impersonate trusted suppliers and even corporate executives. Then they ask us to change banking account details. And we believe that we're dealing with that supplier or executive when in reality, it's some bad guy. And as soon as that money hits that account, it's swept away to some far off account where it's really, really hard for us to retrieve it. We need to find ways to ensure that we are at less risk of fraud, because you better believe that fraud is going to become a bigger issue if the economy goes south. And that brings us to our next poll question, which is about to be displayed on your screen. This time we want to know what percentage of your AP team's time is spent on manual tasks rather than strategic growth generating activities. What percentage of your AP team's time is spent on manual tasks rather than strategic growth generating activities? Is all their time spent on manual tasks? Is between 75% and 99% of their time spent on manual tasks? Is between 50% and 74% of their time spent on manual tasks? Is between 25% and 49% of their time spent on manual tasks? Between 1 and 24% of their time? Or none of it? All they do are strategic tasks. Take a moment to respond to the poll question now displayed on your screen. And we'll take a look at the results in just a moment. And there they are. We asked you what percentage of your AP team's time is spent on manual tasks rather than strategic growth generating activities. 57% of you say that between 50 to 74% of your AP team's time is spent on manual tasks. 43% of you say that between 75% and 99% of your AP team's time is spent on manual tasks. EGADS, that means that all of you say that most of your AP team's time is spent on laborious, repetitive, mind-numbing activities like keying invoice data, chasing down information, fixing errors and mistakes, shuffling paper and emails, and responding to all those calls and emails from suppliers about where things stand in the process. Well, all that time that your team is spending on those activities is time that they can't spend on more strategic activities like analyzing data or collaborating with procurement and other stakeholders, or even EGADs, building relationships with suppliers. And you better believe that moving forward, our senior execs are going to look to shift that paradigm, because the fact is that in tough economic times, spend will be scrutinized. Organizations are going to look for ways to better control their spending. They want to eliminate manual tasks. They want to eliminate all those repetitive, unfulfilling tasks. The 60% of the median cost of accounts payable is wrapped up in labor. 60%. So all those manual tasks take a big toll on our workload. But it's not just about reducing staff here. It's also about freeing up staff to be able to focus on the things that matter most. Look, if times get tough, we're going to need all hands on deck to help us get through it. And we're going to want to have some folks analyzing data or collaborating with stakeholders to figure out the best approach. Another thing that we're going to want to do in tough times is reduce all these exceptions that suck up our staff's time. This is actually the biggest concern that AP leaders have these days about their operations, invoice exceptions. We simply don't post enough of our invoices directly to our accounting software or ERP. We've got to find ways to reduce disputed invoices. And if we want to reduce spend, well, we've got to be able to mitigate fraud. We can't afford to have bad actors chipping away at our profitability. Organizations are going to also look for ways to improve return on investment, whether it's new technology, existing renewals, or the need to add staff. A CFO or a controller is going to demand that we show them an ROI. And I think that this is where AP automation shines. In fact, it's always been the case. Today, most organizations achieve return on investment on AP investments in 18 months or less. Many achieve ROI in 12 months or less. If you're struggling to convince senior management that this is a good time to automate AP, work with your technology providers to build a business case and show senior management that you're going to be able to deliver a quick win for them. They're not going to be interested in a long ROI. CFOs are also going to be looking for better visibility in tough times. Everything's going to be up for discussion if things go sideways. And so senior management's going to want to see what everything is. And we can do that in AP. We can start to provide them with better visibility into spending. Now, the trick is we can't do it at the ERP because a lot happens before an invoice ever hits the ERP. And we can't do it on a spreadsheet basis because, well, let's face it, spreadsheets are outdated the minute we hit save. And in many cases, they can easily become corrupted, or they can be stored on Gladys's laptop where nobody else has access to them. So we've got to find ways to provide real-time visibility to senior management. Another thing senior management is going to be expecting as we move forward is to do something about the financial close. 1/3 of AP departments these days say that their financial close is taking longer compared to before the start of the pandemic. Gathering information from folks who are working home is harder these days. It's never been easy because we've always had fragmented systems and manual processes that held things back, but now it's even tougher. Well, AP automation and the reconciliation of invoices and payments in real time can help expedite that financial close. It can put smart insights at the fingertips of the people who need them. What's more, AP automation can provide cash flow insights to senior management in a more timely basis, and it can provide us with better visibility into our spending. So if this is what we need to achieve, why haven't more AP departments done it? What's holding AP back? Well, I'll tell you what it is. It's those manual repetitive tasks that we spoke about in our last poll question. In a study by Insight Avenue, they found that 53% of the typical AP practitioner's day is spent on manual tasks such as keying data and shuffling paper. And yet more than 40% of these, and yet today, more than 40% of end-to-end AP processes are manual or paper-based. If you put those two data points together, that means that there's lots of opportunities for takeout of time wasting activities in the accounts payable department. There's lots of low-hanging fruit, if you will. All across the invoice to pay life cycle, you can find inefficiencies. Think about it. From the moment somebody raises their hand and says they want to make a purchase, all the way through reconciliation, we have this hodgepodge of closed loop solutions and point solutions and manual processes to fill the gap. Whether it's trying to get the PO requisition approved, whether it's issuing the PO to a supplier, whether it's how we go about opening the mail to get our invoices, whether it's keying invoice data or routing them to the right approver, all of this is a manual affair. And today it's becoming harder and it's becoming riskier. Because if we have one typo in the process, it creates a huge exception downstream. If we use emails and we have a bad actor slip through the cracks, well, now it's creating lots of risk. All across the process, we have these manual processes. The trick is to find an AP solution that allows you to automate this process end to end. And while you don't have to automate it all at once, you want to make sure that whatever vendor and solution you're looking at has the ability to do that over time. Because folks, these AP inefficiencies add up in a big way. Poor visibility makes it tough for us to be able to see what's going on with our cash flow and our corporate spending. It drives up our costs. It results in more past due payments. It overworks our staff, and it makes it harder to scale. All right, you want some benchmark data to prove my point? I'll give it to you. According to IOFM, it costs highly automated AP departments less than 1/4 as much to process a single invoice compared to their peers with little or no automation. What's more, highly automated AP departments can process 8 times as many invoices per full-time equivalent as their peers with less automation. And as impressive as that is, think about this. If you combine a high level of automation with a high percentage of PO-based invoices, now you're able to process 11 times as many invoices per FTE. Think about what your staff could do with all the time they save. That's not all. Highly automated AP departments take less than 1/4 the time of their peers that have less automation to approve a single invoice for payment. Highly automated AP departments experience less than 1/4 as many duplicate payments. And highly automated AP departments capture 7 times as many early payment discounts as their less automated peers. Put that all together, and that is a compelling business case for AP automation. And that, my friends, is a big reason that worldwide $1.5 billion is being held hostage on balance sheets. It's because of inefficiencies, because of friction in finance processes such as AP. And that is the first step toward financial resiliency. Make your AP department more efficient. How do we do that? Well, the first thing to do is to automate your workflows. Today, many of you are still relying on email to route those invoices for approval. What I want you to do is find a solution that has automated workflow routing. You want to make sure that you don't misroute invoices. You don't have to track down approvers. The invoices are digitally routed based on pre-configured business rules. Recipients receive an alert that there's an invoice awaiting their approval. They're notified when the invoice is approaching its due date. The invoice is automatically escalated to a manager if the due date expires. And all the while, you as an AP professional have visibility into what's going on in the process. The next thing I want you to do is to find ways to automate your data capture. Then you can start to reallocate your staff to mission critical tasks. Today's digital technologies have the ability to ingest any paper or electronic document, extract data with a high degree of accuracy, validate the data to information residing in your ERP, automatically match or post matched invoices directly to the ERP or accounting software, and then route those unmatched invoices or invoices that require approval to the appropriate person. I also want you to find a solution that can support your global operations. What you want to do is stabilize your operations so that you can provide accessibility and support remote working. Look, there's no telling when or if AP departments are going to come back to the office full time. So you better have a cloud-based solution that can support those far-flung workers. You also want to start to position AP as an information hub to the business. So you want to have dashboards that show the status of invoices and KPIs. You want to have drill down capabilities so you can uncover trends and get to the root cause of problems. You want to have mobile access so so decision makers on the go can stay in the know. You want to have exports into any downstream system so information can flow seamlessly without anybody having to rekey it. And you want to have ad hoc reporting. So as your business needs change, those reports can change without you having to go back to the vendor. And finally, I want you to digitize your processes so your business can become more adaptable. And that brings us to our next poll question, which is about to be displayed on your screen. This time I want to know, do you believe your AP department currently has the tools and technology to provide senior management with real-time visibility they need during an economic downturn? Real-time being the operative phrase there, people. No fibbing. Yes, no, or not sure. And if you're using spreadsheets, do not answer yes. I'll just be mad. Take a moment to respond to the poll question now displayed on your screen. And we're going to discuss the results in just a moment. What is real time? I'm often asked. Well, it's not information at the end of the week. It's not information at the end of the month. It means now. It means like when I pick up my phone and I want to see exactly what's happening in the world at any moment in time. We asked you, do you believe your AP department currently has the tools and technology to provide senior management with real-time visibility they need during an economic slowdown? 57% of you say no, you do not. 29% of you say you're not sure. I'm going to count that as a no. Only 14% of you say you do have the real-time visibility your senior management needs. You better believe they're going to demand it. All right, so here's the part where you grab your pad, you grab your pen, and we're going to show you how you can get through this in one piece. Typically during an economic downturn, what do businesses do? They fire people. They resort to expensive borrowing. They start to shut stuff down. All of this puts the business a step behind. Once we get out of the woods, once we're out of the storm, well, now we got to start to rebuild things. This is completely the wrong approach. There's going to be cases where you have to take some of these measures, but the fact is that there's a better way to do things. There's a better way to respond to an economic downturn. And what I believe you want to do is build a foundation where you're more efficient, more in control, and more adaptable. And that starts, my friends, in accounts payable. What we want to do is we want to build efficiency, and we want to do it all the way across the AP process, from PO requisition and presentment to supplier onboarding to invoice processing to supplier payments to reconciliation and reporting. I want you to go and find yourself a solutions provider who has a way to digitize this entire process. No, you do not need to deploy it all at once. In many cases, that would be the wrong approach anyway. What you want to do is find that solutions provider who can grow the platform over time to meet these needs. The idea is that anywhere you have a gap in this process, you're going to have opportunities for higher costs, more errors, less visibility, and frustration with stakeholders and suppliers. So I want you to find a solution that can digitize things end to end. And one of the key things that this partner needs to do is to streamline your workflows. I want you to find a partner that excels at workflow automation. Folks, to me, this is the table stakes when it comes to building a resilient AP operation. We want to eliminate this chance of misrouted invoices. We want to eliminate the opportunities for invoices falling into the wrong hands or the wrong people infiltrating our workflows. We want to have notifications of pending invoices so we can accelerate things and things don't become stuck in the process. We want to make sure that purchasers know that an invoice is approaching its due date. Email boxes are busting at the seams these days. You can't count on things to percolate to the top. Use a workflow solution to make sure that folks know what's important. You want to have automated escalation so we don't have all these suppliers calling and emailing us. And we want to make sure you have real-time visibility into what's going on. What's more, all across this process, I want you to make sure that the solution provides you with complete audit tracking. I want it to keep tabs on every step that occurs to every invoice, so that the audit process becomes a breeze. 93% of finance leaders believe that end-to-end automation can improve their overall AP process. You want to automate AP end-to-end, you better have a good workflow solution at its core. The second step to becoming more resilient in AP is to improve your control. I want you to start to capture spend from the very beginning. I want you to start capturing data the moment it shows up on your doorstep. We do too much downstream. We're relying on the ERP. Folks, there's a lot of visibility and control that we can get at the point of presentment. And that's whether it's the point of presentment is a PO requisition, PO presentment, or invoice receipt. I also want you to automate with rules-based approval routing. I want you to find ways to route those PO requisitions and invoices based on business rules that you set up. I want you to find ways to streamline vendor onboarding and management. 50% of AP leaders recently surveyed by IOFM say that their process for onboarding suppliers is more complex and it's taking longer these days. And you know what? It's riskier. There's big fines if you start paying a supplier you shouldn't be paying. I want you to digitize that process. Don't rely on paper forms and e-forms and emails to do this. I want you to find a digital solution. I also want you to find ways to start automatically generating POs and presenting them electronically. Once you present a PO electronically, the odds are increased that you're going to receive an electronic invoice back. And in many cases, you can convert those POs into electronic invoices that flow directly to your ERP and are matched without anybody having to lift a finger. And finally, I want you to find ways to gain visibility into the spend pipeline. I want you to understand what's happening all the way through from the moment that a PO is requisitioned. What's more, we need to get control over our financial close, and the best way to do that is through the reporting that's available in AP Solutions. Those graphical dashboards I talked about, well, they let you know when trouble's brewing. Those drill down capabilities, they help you start to be able to reconcile things on the fly. Mobile access gives our finance leaders visibility into what's going on at any point in time. Information can be exported without the need for manual keying or these robots, and ad hoc reporting gives us visibility into what's happening with our finances and helps us project out our cash flows and our cash needs. What will also happen is when you start digitizing your AP process, now you're going to start to streamline compliance and risk mitigation. I want you to find ways to start to digitize tax form collection and validation. This is the time of year that many of us start to scurry about to try to collect all those tax forms that we let slide. Make it part of your supplier onboarding process. Digitize the process. Make it a rule that you need to have a tax form before you're going to pay a supplier. Find automated ways to verify bank account details so that you're able to ensure that the bank account that you're paying belongs to the supplier that you want to pay. There's solutions on the market today that can automatically tell you who the owner of a bank account is, whether the bank account's open, where that bank account resides, whether there's been any issues with the bank account. I also want you to automate initial and ongoing screening of suppliers. I want you to find ways to automate sanctions clearing, TIN matching, and other compliance checks to ensure that you should be doing business with the supplier. I want you to start paying your suppliers electronically. Look, I know that electronic payment fraud such as BEC, phishing schemes, and account takeovers is on the rise, but that has a lot to do with the infrastructure we have in our organizations, not the electronic payments. If you pay suppliers electronically, you will reduce your risk of fraud, especially if you use virtual cards. So I want you to find ways to move more of your suppliers to electronic payments. And if we start having an economic slowdown, you better believe they're going to want to get paid electronically to accelerate their cash flows and improve their cash modeling. And finally, I want you to proactively identify payee fraud risks using tools such as bank account validation and other measures. The third way to build resiliency in your AP department is to become more adaptable. I want you to leverage tools that digitize the AP process so you could forecast industry trends. Use that historical data that flows through your AP department to understand when there's ebbs and flows in your cash flow. That can help you build a real-time strategy with your CFO or other finance leaders for how it is they should be managing their working capital. What's more, I want you to help provide visibility into the business through spend management and operational performance reporting. Now the CFO will be able to get a better sense of the financial health of the business at large. And this brings us to our fourth poll question, which is about to be displayed on your screen. We want to know, do you have an active or upcoming AP automation initiative? Do you have an active or upcoming AP automation initiative? Yes or no? Take a moment to respond to that poll question. And what we're finding is 71% of all AP departments have plans to deploy technology in 2023. That's according to the Institute of Finance and Management, 71%. What might surprise you is that 44% of AP departments that say that they're already largely automated, they have plans to automate as well in 2023. And that has a lot to do with the types of topics we're talking about today. So what's the message today? Well, the message is that there's a distinct possibility that we can have an economic slowdown in 2023. While my crystal ball can't tell me for sure what's going to happen, the fact is AP leaders need to be prepared for anything. And one of the best things that AP departments can do is build resiliency for times, whether they're good or they're bad. And the best way to do that is to digitize your AP process from end to end. You want to find a solution that increases efficiency, that provides you with better visibility, better control, and better adaptability. And I believe that AP automation can do that like no other approach. Now, my friends at MHC think they can lend you a hand. To tell you more about that, I'm going to hand it off to Jeff.
Hey, Mark, thanks for a great presentation. Some wonderful insights on how automation can help businesses and, most importantly, AP leaders weather an uncertain economic storm. We at MC North Star can help by empowering your people to take ownership of your processes, your documents, and your communications with the simplicity of self-service. We help streamline your AP payment processes with an automated accounts payable solution configured to your specific needs. And finally, we maintain compliance, reduce your AP team's workload to ensure that payments are made accurately and on time. Next slide, please. So again, thank you all for attending. We did have a couple of questions come through. Mark, I've got one that came through about halfway through the presentation. We have some existing AP automation technology that doesn't work so great. What do you recommend we do with it?
Yeah, and that's not uncommon, and I chuckle because this is one of the biggest challenges AP departments face. Look, most of you have something, and most of that something ain't so hot because it's old. It never worked great. So the easy answer, or what a vendor might tell you, is just throw the thing out. And we know that from a practical perspective, that's not going to work. So what I want you to do is I want you to assess where your current operations. And this is hard work. I want you to take a hard look at your current processes, your pain points, what it is you're trying to achieve. And then I want you to plot your existing technology as part of that flow. Is there things that the technology does well that it could handle? And where are the things that it doesn't do that you're going to need new technology for? What's going to happen is you're going to be able to identify what the priorities for improvement are. And then you start talking to vendors such as MHC and others and say, hey, are you a good fit for helping me with these? Over time, I want you to phase in this new technology and start to phase off of the old technology. There's no need for a big bang. If that's possible, that's great, but you don't have to do that. Look, we're working longer hours these days, and you want to manage your change, and you want to manage your risks. So there's a way to, over time, to push off that old technology. The key thing is don't settle Don't stay with the status quo just because you're afraid to raise your hand and say this isn't working so hot. Senior management probably doesn't know of the problem, and you can't afford to be saddled with this bad technology for too long. Great question, Jeff.
Thank you. Next slide, please. Again, just wanted to thank you all for attending today, and thank you, Mark, for a wonderful presentation. If you're interested in learning more about what's going on at MHC, you can register for our monthly newsletter. You will receive reminders about upcoming webinars and interesting thought leadership content. A link to sign up will be included with our follow-up email, so be sure to register today. Again, thank you, everyone, and have a great day.